Joining me now, former Home Depot chairman and CEO is Bob Nardelli is here. Bob, great to see you this morning. Thank you so much for being here. We're excited to have you back. Let's start with this. Home Depot, your reaction to the numbers this morning.
Well, I couldn't be happier, Maria. Thank you for having me on. Ted Decker, the chairman and CEO, just runs a really solid business with his team. I think that performance is proof positive of what he is doing there relative to, their market focus and customer centric. They do a great job in running those stores. They've got merchandise that really is playing to the customer today. The holiday season is always big now with Halloween and then coming up with Thanksgiving and Christmas. So I think the other thing that they've done extremely well, Maria, is that Ted and the team have balanced their portfolio between consumer and the contractor with the recent acquisition to really grow Home Depot supply. So I think the challenge he's overcoming right now with high interest rates is that the homeowner typically would invest for resale value. And now what he has to basically cater to is if it isn't broken, don't fix it. So it really shows, I think, the strength of Home Depot. The stock, again, another proof positive. You saw it hit an all-time high yesterday. It's up, you're showing at 416 right now. So they do a fantastic job, Maria. I couldn't be happier for Ted and the team.
Well, I mean, Bob, the company is giving guidance showing a decline in comp store sales. Home Depot expecting full-year comp store sales to be down 2.5%. What is your sense of the macro story? This is a company that gives us a great window into the consumer, but they're expecting comp store sales to fall 2.5%. In the full year, Bob.
Yeah.
Does that trouble you? What does that tell us about the consumer?
Well, that tells you, again, the market-back focus that I mentioned, Maria. It's, during COVID, it was really a boomer. If you think about the consumer today, they're really stretched. Credit card debt is high. And they've pulled back a little bit from investing. Again, as I said, they would invest in their home, improve the overall value, and then they would flip that home. But with interest rates so high, everybody has pulled back. Housing starts have pulled back. So I'm not surprised, but I'm not worried about the strength of Home Depot. It is a solid company, and Ted and the team will do extremely well.
All right, Bob, let me broaden this out. Congress returns for 20 legislative days of this lame duck session. The Senate is back today. GOP members working to extend President-elect Trump's 2017 tax cuts. These are certainly among the priorities in terms of economic policy. Those tax cuts are set to expire the end of 2025. Republicans are prepping a fast-track budget process, allowing lawmakers to approve a bill with a simple majority. I'd like to get your take from a business sense about the regulatory framework. The Journal this morning writes this: Republicans' first tax cut challenge will be agreeing on the maximum deficit number. What do you want to see, Bob, as a businessman who's on so many boards and has your hand in so many different growth stories? What do you want to see out of economic policy out of this administration, particularly as it relates to regulations from the incoming Trump administration, Bob?
Yeah. Well, again, I couldn't be more excited. And I'm currently attending the Global CEO Forum here in New York for Fortune. And again, the conversation there is very optimistic. There are still some naysayers, but if you look at, the quick start of this new administration and President Trump, I think bodes very well for business. If you think about, you mentioned the tax cut for the consumer, for the individual, but his comments about corporate tax, his comments about growth, his comments about, again, dismantling all of the bureaucracy that has taken place in this administration. I mean, a lot of what they talk about, Maria, in this administration is deceptively correct. They talk a lot about permits out there, but permits don't pump oil or gas. It's the number of rigs out there, and the number of rigs have been relatively flat. So I think he'll break through that issue. He'll break through, maybe repatriation of these offshore funds. I think he's going to be very positive about growth. He's going to be very protective. He's going to try to, again, reshore, onshore stuff out of China. Big discussion yesterday about the supply issue, basically superseding the domestic demand issue in China. So a lot of the companies I'm talking to and CEOs are already looking at how they're going to move out of China, either onshore back to the U.S. or reshore to another favorable country.
All right, so China, certainly a big factor. I'm glad you're here this morning. I want to talk more about the regulatory framework, Bob. Can you identify one or two rules or regulations that you saw during the Harris-Biden administration that you believe will go away and unlock growth?
Yeah. Well, certainly their mandate on EVs is yet another debacle.
Yeah.
And I think the issue there on EVs, I talked yesterday at the conference, there's a lot of similarities, I think, Maria, between EV and artificial intelligence, AI. They're both restricted by utilities and energy. And this is one of the things that President Trump will do. He will unlock the stranglehold we've had on energy in this country, which is desperately needed. You know, the growth prospects for AI, you've seen it in the stock market, but again, it will be hampered, it will be hamstrung a little bit because of energy. You know, the new data centers, they're looking for places to put that data center where
That's
there's
right.
energy. You look at 3 Mile Island opening again. I think these small mobile nuclear reactors will be the long-term solution for these data centers to support AI, Maria.
All right, great commentary from you, Bob. Always great to see you. Thank you, sir. Bob Nardelli this morning.